AI reshaping Wall Street. For decades, Wall Street has been the epicenter of financial power, innovation, and high-stakes trading. From the open outcry pits of the past to the rise of electronic trading in the 1990s, each technological shift has redefined how the market operates. Today, we are witnessing yet another seismic change: the integration of artificial intelligence, AI, into the heart of global finance. AI isn't just a new tool, it's becoming the backbone of decision-making, risk assessment, and investment strategy. From algorithmic trading to fraud detection, the influence of AI is reshaping how Wall Street thinks, acts, and profits. The rise of algorithmic trading. One of the most visible impacts of AI on Wall Street is algorithmic trading, the use of computer programs to execute trades at speeds and volumes far beyond human capability. Modern AI systems analyze enormous datasets in real time, detecting patterns, price movements, and market sentiment within fractions of a second. This has enabled high-frequency trading, HFT, firms to make thousands of trades in milliseconds, capitalizing on tiny market inefficiencies. But unlike earlier rule-based algorithms, today's AI trading bots use machine learning to adapt and refine their strategies over time. They can process social media chatter, economic indicators, and even global news headlines to predict short-term market movements. The result: faster trades, better accuracy, and often higher profits. AI in risk management. Risk management is a cornerstone of any financial operation, and AI is revolutionizing it. Traditional models rely heavily on historical data and fixed assumptions, which can fail during unprecedented market events. AI, on the other hand, continuously learns and adjusts, allowing firms to assess risks dynamically. By integrating data from multiple sources, market prices, geopolitical events, weather reports, and even satellite imagery, AI can provide a more holistic view of potential risks. For example, an AI system might detect early signs of economic instability in a country by analyzing shipping data, currency fluctuations, and news reports, enabling investors to adjust positions before the market reacts. Fraud detection and compliance. In a world where financial crimes are becoming more sophisticated, AI offers powerful tools to fight fraud. Machine learning algorithms can scan millions of transactions in real time, identifying anomalies that may indicate insider trading, money laundering, or fraudulent activity. AI also assists in compliance by automatically monitoring and analyzing communication records, trade logs, and regulatory updates. This not only helps firms avoid costly fines, but also maintains investor trust in an industry where reputation is everything. AI and investment research. Investment research used to be the domain of human analysts poring over reports, charts, and financial statements. Now, AI platforms can process and interpret vast amounts of financial data in seconds, providing deep insights that might take a human weeks to uncover. For instance, AI can analyze corporate earnings calls, extracting sentiment and detecting subtle language shifts that might indicate future performance. It can also compare a company's financial health against industry benchmarks, historical trends, and global economic conditions, helping portfolio managers make better informed decisions. Sentiment analysis and market psychology. The stock market is not just about numbers, it's about psychology. Investor sentiment plays a massive role in price movements, and AI has become adept at measuring it. By scanning news articles, tweets, blog posts, and even Reddit forums like r/Wall Street Bets, AI systems can quantify market sentiment and predict how it might influence trading behavior. This capability proved particularly relevant during events like the GameStop short squeeze of 2021, where retail investors mobilized online to drive up stock prices. AI-driven sentiment analysis helps hedge funds, brokers, and institutional investors gauge crowd behavior and respond accordingly. AI in portfolio management. AI is also transforming wealth management through robo-advisors, digital platforms that use algorithms to build and manage investment portfolios. These AI-driven systems assess a client's risk tolerance, investment goals, and time horizon to create a personalized strategy. Over time, they automatically rebalance portfolios, optimize asset allocation, and minimize tax liabilities. This democratizes access to sophisticated investment strategies, allowing even small investors to benefit from tools once reserved for the wealthy elite. Predictive analytics for market trends. Wall Street thrives on predicting the future, and AI is making those predictions more accurate. Predictive analytics powered by AI can identify long-term market trends by processing data from a variety of sources, from macroeconomic indicators to consumer spending habits. For example, AI models can forecast how new government policies might affect specific industries or predict shifts in commodity prices based on weather data. This foresight enables investors to position themselves strategically before the market adjusts. Challenges and concerns. While AI offers extraordinary advantages, it also raises concerns. One issue is the black box nature of some AI models. They produce recommendations without offering transparent reasoning, making it hard for regulators and traders to fully understand the decision-making process. There's also the risk of over-reliance. If too many firms use similar AI models, their collective behavior could amplify market volatility. Furthermore, AI systems are not immune to bias. If trained on flawed or incomplete data, they can make misguided predictions, leading to costly mistakes. The human-AI partnership. Despite the fears of AI replacing human jobs, the reality on Wall Street is more about collaboration. AI handles data-heavy tasks at lightning speed, freeing human professionals to focus on strategic thinking, relationship management, and ethical oversight. Traders, analysts, and portfolio managers are learning to work alongside AI, using it as a powerful partner rather than a replacement. The future of AI on Wall Street. Looking ahead, AI's role will only expand. We may see AI systems that can autonomously negotiate trades, integrate blockchain-based smart contracts, and interact with decentralized finance, DeFi, platforms. Quantum computing could further supercharge AI capabilities, allowing it to solve financial problems that are currently too complex for even the most advanced systems. And that's how artificial intelligence is rewriting the rules on Wall Street. The future of finance is faster, smarter, and more data-driven than ever before. But it's also full of new challenges. What do you think? Will AI make markets safer and more efficient, or could it trigger the next big crisis? Let me know in the comments below. If you enjoyed this deep dive, hit the like button, subscribe for more insights on the future of money and technology, and turn on notifications so you never miss our next video. Thanks for watching, and I'll see you in the next one.